Greetings, members, one and all of the Salivation Nation. Timing your silver buy for the rest of 2021. Let's take a look. Silver. It's been kind of in a slump as of late. Some of you remember I did a video very recently about silver stagnant summer. And if you want to check that video out, I will link it at the end screen of this video. So watch until the end and you will see that. Because I think there's something to be said for what's going on in the summer with silver. But there's something to be said on what people think silver is going to do before the end of 2021. And though I'm not a financial advisor and I did not stay at a Holiday Inn Express last night, I've made a prediction that I think we'll see silver climb up to around $30 to $35 an ounce. And believe it or not, though silver is now trading a little bit less now, $25.24. As of the recording of this video, it's down almost a percentage point. I still feel like we're going to see higher prices. I'm going to be referencing an article here from Barron's that thinks the same thing. And they're going to give you some advice on when to buy silver. And I tend to agree with this advice on a general rule. But there is a disclaimer here that I usually do give because I don't like to tell people, hey, buy now or buy at a specific time. I think people should do their own due diligence and research and also consider their own individual financial situations. And I do believe in utilizing a smart version of dollar cost averaging. I've talked about that in a prior video as well. But let's take a look at this article here and see what it says. Silver prices look to stage a double-digit percentage rally in the fall. That's a pretty bold prediction here. That's what they look to be setting here in fall. However, experts say investors should wait for a likely dip in prices over the next few weeks before snapping up a stash of the metal. Now, if you look through the trends, typically silver tends to suffer a bit in the summer. In fact, all precious metals tend to as well during the summer months. But we might see the prices go down. This has not been a usual year, though, as last year was not either, because it was around this time we did see silver rally to $25 an ounce. You may remember I posted videos about that last year at the time. I'm going to quote a very controversial figure here now in this video. Our view is that silver is vulnerable to a wave of selling in August and into September. Jeff Christian, managing partner of New York-based commodities consulting firm CPM Group, is what he told Barron's. Now, I know people have, you hear that name, it kind of triggers some folks, and they think, well, he is just hates silver. And they're like, I don't know a whole lot about him. I disagree with some of the stuff he says, but I believe sometimes some of the contrarian view for the precious metal space, I think is needed to kind of counter some of the overly bullish information that's out there. And you know me, my channel, I do tend to be contrarian, not necessarily to be difficult or to go against the grain, to try to send a message, but because I believe really the metal sells itself, and we don't need to hype it up. But anyways, he gives the following piece of advice that I think is pretty sound. He says, if you see $24 an ounce prices, then buy it, because the probability is that we'll see $28 soon. And ultimately, it will move higher over the next several months. So you want to talk about somebody who supposedly is anti-silver. Well, that's a pretty bullish statement, and I tend to agree with him. In fact, that falls pretty much right in line with my feeling on where silver is going to go before the end of the year. That does not mean I'm right. It does not mean he's right. But if he's like me, I don't base my reputation on my predictions. I do it for fun. I'm not an expert in some of these areas, but I do feel like I do keep up with the markets enough that I feel I have a semi-educated opinion about it. Regardless, the article continues, if the rally takes place as forecast, Anyone buying silver at $24 a troy ounce could see gains of at least 16%. And inflation rate is about 5% now, so that would be a pretty good return. However, we are talking about the spot price of silver, and we are still dealing with some pretty hefty premiums, although they are coming down a bit. Recently, silver fetched about $25, according to the London Bullion Market Association data. Investors wanting to benefit from the likely rally should consider buying the iShares Silver Trust Exchange Traded Fund, ticker SLV, on price dips. Alternatively, you could buy long-dated silver futures on the CME exchanges. No mention in the article about PSLV, that's Sprott's physical silver, where every ounce is accounted for if you buy from that. If you're going to buy paper silver, that's where I would go. I would not go to a derivative-based exchange-traded fund, in my opinion. In fact, my feeling is go ahead and bite the bullet on the premiums and get the physical. Let's get physical. I want to hear your silver talk. Prices for the white metal have been on a wild ride over the past year and a half, save for this summer. They've been kind of stagnant, as I mentioned before. From March 19th through August 7th, 2020, the price shot up from $12 a troy ounce, in fact it went under $12 briefly, to more than $28. In fact, it went up to $30. It touched on it very briefly, to $30 an ounce. Since around early August of last year, prices have moved sideways, bouncing between lows of about 22 and highs near 30. Christian sees soft prices this month and next, partially caused by seasonal weakness from industrial buyers such as electronics manufacturers and jewelry makers. Typically, such businesses would take inventories and vacations during this period, he says. That effectively means significantly lower demand. This year, the two sectors are expected to consume almost 500 million ounces of silver, according to CPM. That's about half the projected supply for 2021 of 1 billion ounces. Exhausted silver bulls are another problem. These buyers likely piled into the market early in the pandemic, watched the price rally, and are probably despondent now given the lack of continued rally, Christian says. Meanwhile, the stock market steadily moved higher. Let's pause here for a moment, because we need to see if we can get ourselves a little view of this soft and cuddly kitty, at least a pause. It's not very often this happens, but the kitty was nearby. You will see the kitty's paw. There we go. Paw around there. There you go, kitty. All right, that's enough. I had to force the kitty to do that, but the kitty is purring. So the kitty is somewhat agreeable, but you had a little view of the kitty there. The Soft Teak and Cuddly Kitty Part 2, the sequel, who is still alive. That's a proof of life concept of the kitty. The article continues. The performance divergence would like to prompt investors to liquidate at least some of their holdings, according to a recent research from Swiss bank UBS. Selling pressure on silver should come from investors trimming their ETF and futures positions. And that is where you're going to see it. That's where the weakness is. That's what we saw last March. We saw massive sell-offs of silver to below $12 an ounce. And that was a pretty big drop. But then it more than doubled. But you know what's happening in the physical space? People who are buying physical bullion, such as you see here, they are buying it and keeping it, holding on. And that is definitely advisable. Yes, indeed. It's definitely advisable to buy and hold. And because you don't know where things are going to be going in due course in terms of the economy. And with the premiums that you're paying for silver these days, it's wise to definitely be cautious and be careful. And you don't want to lose money on your purchases and panic sell. You can kind of do that with ETFs because there's not much in terms of premiums and the like that you're dealing with. So it's best to kind of just play it by ear. And when you have the physical, you must exercise discipline because of those premiums, which you don't want to lose. And by the way, when you hold physical, you really do truly own it. Even if you have the PSLV, which is backed by the physical, and I believe in it, I think it's a wonderful tool, a platform. with low premiums. How many people are going to cash that out for physical silver? There are some. We've seen that in the Wall Street silver community, have tested those waters and seen it. But by and large, you got to get the 1,000-ounce COMEX bars, contract bars, in order to do that, those 1,000-ounce bars. Whereas if you can spend a couple of bucks premium on a 1-ounce silver generic round or whatever, you got the silver in your hand and it's right there. So it's very, very good. So silver often gets purchased as a hedge against possible U.S. dollar weakness, and I believe that weakness is best reflected by getting the physical, or best, protected by getting the physical. And the decline failed to materialize. In other words, the dollar weakness failed to materialize over the past year. The trade-weighted U.S. dollar index against broad currencies was recently at a level of 113, up from 111 in early January, according to government data. Dollar strength undermined the rally, says Ross Norman, CEO of UK-based MetalsDaily.com and a precious metal industry veteran. However, temporary selling and price weakness does not take away from longer-term bullish trend for silver, and I do agree with that. Now, Jeff Christian's CPM Group believes that precious metal prices are presently in the foothills of a much larger increase in the prices of these metals over the next several years, states a recent publication from the company. And I think that's pretty sound advice. I tend to agree with that. I believe we're on the precipice of something, not some massive, huge, crazy increase, but a steady climb upwards, doing what I believe silver has done for forever and a day, and that is to preserve your wealth. That's based on expectations of increased demand for silver from the green energy industry, and while gold prices reached a record level last year, silver did not. The prices of the two metals are usually closely related in performance, but I'm going to insert my opinion here. The reason why they've grown apart is because silver is being treated more as a commodity, because it really is these days, than as a monetary metal, which, by the way, it still is these days. There are risks to buying silver. It can be volatile. It provides no dividends. The economic climate may turn out to be different than expected, and increased demand may fail to materialize. Still, on balance, the potential rewards of investing in silver bullion outweigh the risk, and that's why I don't think we should see it as an investment, as the article says here and finishes out. But I agree with the sentiment of the article here, and I agree with Jeff Christian on this, even though I disagree with him on some other aspects. So there you have it. Let me know what your thoughts are in our comment section below. Hope you found this video interesting and insightful. Let me know, and I'm going to encourage you to please rate this video to help the algorithm as much as possible. Share it with all the social media platforms that you can think of, where you think other people might see it other than this regularly in this community. Comment. Let me know what your thoughts are. I'm very curious to see. And if you haven't done so already, subscribe and hit the bell for notifications.